Speaking of kids, I had to get them quiet.
That's okay. They're part of the fabric now, right?
Mm-hmm.
Of the business fabric, the children in the background.
I was going to say children and pets. So we just did a presentation and a dog was barking the
Go up.
entire time. Kind of rough.
Yes, but
Children,
none of you
pets.
have been hit with a bag of popcorn on a live broadcast. Like I have, so.
Cat or a dog that walks across the screen.
Yeah, it's the new relaxed way to do business. Well, welcome everyone. I am Crystal Mitchell, the co-director of Recycling Black Dollars and a business coach in the community. I have two, this being one of them, two podcasts. This one is the community briefing, whose purpose is to bring those leaders in our community that are doing big and great things to our audience, so they'll know who and what is and who is working behind the scenes for them, and also to bring valuable information and knowledge and get conversations going, because that's very important. And then I have and this broadcast live every Friday, every Thursday at 11 o'clock. And then my other show, which has been on the air for 4 years, the Business Zone with Crystal and Gilbert. And that's also where business, entrepreneurship, contract readiness and bank loan readiness and come together to share valuable information to our entrepreneurs who don't normally get the information, and they're so busy working in their craft that they miss out on a lot. So that's who I am, and that's the purpose. This is a community-based effort between with Recycling Black Dollars and the BBA and Vermont Slauson. And I have this utopia dream that we as Black people one day gonna work all together, and we're gonna eliminate all the silos, and we're gonna be a powerful voice that's gonna make a change. That's my utopia and my vision. So I hope you guys are gonna get on board, and that's the purpose of this platform, was to bring us all on board. So I welcome you, and I thank you all for being here. This is being broadcast live on Facebook, as well as there will be a recording that I will share with you. And with that, I'm going to turn it over to my co-host, Ms. Robin Billups, who joined me to bring her amazing fabulousness to this platform as well. And we're going to bring you some great people in the future. So Ms. Robin, I turn it over to you.
Crystal, thank you. Good day, guys. Certainly, I'm excited about the opportunity to inform. And Pacific Coast Regional was one of my favorite community-based organizations. As some of you guys know, I sat on that loan committee almost 40 years ago. I was expecting my son Kenneth, and he'll be 40 next year. And so again, I'm so excited about what's going on there. I'm really elated that Colette has joined the team. And then I see Georgette, who's another one of my friend girls, and Trevor, who's a new friend. But the work that Pacific Coast Regional has been doing for over 40 years, at least I know that long, has been tremendous in our marketplace. And in this time and the space that we're in, I think COVID is going to push us into understanding that foundationally we need each other. You know, everybody has something to add and everybody has something to give and to share. So with that, we're going to turn it over to the PCR committee crew, and let's get some information going.
All right. Thank you, Robin. And thank you, Crystal, for always thinking to ask us. Crystal asked for a quick update on the PPP forgiveness and the changes that are going on. And we've had specialists teaching this from the beginning. Ever since PPP came out, our office continues to teach on all of the funding options. We do that every Wednesday. Trevor and I cover that. And then every Thursday, Trevor and Georgette actually cover our PPP forgiveness program. And so I'm so excited that I want the specialists, because they're doing this every week and training every week on the areas as it relates to financials, what you should be looking for, how to manage, how to do your accounting, how to extend your finances during this time as well, and then also to get the access to capital. And so I'm excited to have them on. I also have other of my team members here. China Spikes is our associate director. There at the top, and happy to have her. She's a great asset to our team. And then Patricia Click. And if anybody has questions for LA COVID Fund, feel free to follow up with Patricia. She knows all about application, and then also getting ready for, if you are a finalist, how to make sure that you get the money. A lot of people get the finalists, but then they don't get the money because they're not following the requirements. And so I'm going to turn it over, and Trevor and Georgette are going to take us through a overview with a focus on the current PPP changes. And then if you guys have any other questions related to funding, we're happy to answer those as a team as well. So I'll turn it over, and Trevor, go ahead and share what you have.
Thank you all for having us here today. So Georgette and I get deep into the weeds on this every Thursday afternoon. And I know we have limited time today. So we're going to kind of do a brief overview of some of the changes, and we'll answer any questions we can get to. I will provide you guys a link with our sort of full presentation and materials, so you can sort of look over those if you need them. So the SBA dropped a couple of sort of big changes the last 2 weeks, if you weren't paying attention. The first one that is sort of the most important is that they've started this 3508S application. You've probably been hearing that banks particularly, and there's a couple of bills on the table that have been sort of floating around but not yet reached the floor, that would give sort of a self-certified forgiveness to loans that were 150,000 and under. We've been sort of waiting for that for a couple months because Congress can't seem to get their act together on a new stimulus package. In the meantime, the SBA went ahead and just authorized under their own authority, and interestingly enough, their memo on this also explained why they believed they had the authority without Congress, to do roughly the same thing for loans of 50K or under. And that's what the new 3508S application is. Now, keep in mind, your bank may or may not be accepting applications at this point. Most of them are not. And we can talk later about sort of what to do about that fact if you're in that position. And the reason is because they don't even want to do this. And the reason is because you still have to document the spend, which means you don't have to do these calculations anymore. So if you're sort of familiar with how this works, the sort of two main calculations you have to make are, where your FTE stood from, pre-loan and then now during the loan, and what your wage rates were. And you no longer need to make that calculation. You're exempted from those. However, you do need to send in the documents that prove that you spent it on covered items. And so that's sort of the sticking point for the banks. They don't even want to do that. They just want you to sign a form that says it's all good and they can move on. So the way you get to use this application is if the loan for your particular entity is under 50K, okay, and that every other business that you own or any other owner of your business owns, and this is called the affiliation rule. So any owner of your business, you have to add up all their other business interests, and that's every owner in your company, has to have a total set of loans under 2 million. Right? And that's the vast majority of people. But keep in mind, if you've got a couple of owners that own other things, you have to add up all those PPP loans together to find out what that total is. As long as it's under 2 million, then you can use this very simple application, which basically just asks you for the loan amount, the number of employees you started and ended with, and you just sort of initial that you've done everything right down the line. The next one that came out a little bit before that was the EZ application, which is really not that much different. And basically what it says is if you just assert that you did not have any of these reductions, then we will take your word for it. You still have to submit the documentation again, but we will take a self-certified assessment on that. The difference being is that this even if your FTEs and wages are actually off, you don't even need to prove it anymore. You just need to prove that you spent the money. And then of course the full standard application is still out. I've put this chart in here, not that I'm going to go over it, but just for your reference, if when we give you the link for this, which sort of gives you the different applications and who gets to use it and who can't, and what kind of documentation you need in there. The next big change that happened is they finally defined what ownership means. And this happened a couple of weeks ago. And ownership means, and then a couple of weeks ago, they said, okay, now for transfers of ownership, you cannot sell or move or trade or give more than 20% of the stock or other way you calculate ownership in the company without bank and SBA approval. You also can't give away or sell or transfer 50% or more of the assets of the company, whether or not you change any of the equity or not. You also cannot merge into another entity, again, without bank and SBA approval. The interesting thing about this is they didn't define any penalties for it. So while we assume that means you will lose forgiveness or they can call the loan, sort of immediately, it actually isn't stated what happens to you if you violate these. So we assume they'll define that later, but at the moment, there's no question for that. I don't see this being a huge problem for most people. Where we're going to see this is in things like divorces, trusts, in things like that, where you're transferring sort of ownership between a family trust or, to other family members. And so that is sort of the things that we sort of worry about on this. And then again, I've included a chart on how this all works for your review later, which I won't go over now. The next big one is they actually defined what owners are, which we didn't have for about 5 months. And ownership is now defined at 5% of the company. Now, understand this only applies to S and C corps, right? Partners by definition are owners, and obviously sole proprietors are owners. But if you have 5% more, then you are limited to the owner compensation limits, not the employee. Even if you pay yourself as a W-2 and you're carried as an employee, you are maxed out at the compensation limits if you own 5% or more. Now, for medical benefits and retirement benefits and all the other sorts of sort of non-cash payroll interests, we now define that at 2%. That happened about 2 months ago. So if you didn't notice that one, that's more of an issue for larger corporations. S corps don't get to claim a lot of these anyway in PPP rules, and obviously sole proprietors not at all. The other big one was that what's called rents to a related party, right? And what this means is that if anyone who owns, this is the problem with this, and we were actually working with Congress to fix this, but if anyone who owns any piece of your company, any part of it, right, 1 share of stock, 1 percentage point, whatever it is, if any one of them has any interest in the entity that owns the building in which your business resides, okay, then you cannot deduct your rent payments to that entity because that's considered a related party. And that means your deductions for forgiveness are limited to whatever mortgage interest is left on the property. We have submitted to Congress that they should change that to a percentage of ownership, which they're working on, but I don't know if it'll come in time. And this next thing, which actually makes a little bit of sense, is that if you sublease any of your space, then you must deduct that sublease rent from your rent total, which makes some space, right? So if you, let's say, pay $1,000 a month of rent, but you rent out some part of your space to another company for $200, then you can only deduct that $800 a month. That's the basics of it. All right, now on the ownership areas, we've included this chart, which again, I won't go over for time reasons, but this will show you sort of what you're allowed to claim in benefit pays depending on what type of organization you are and how you carry yourself as an owner. And also the compensation limits that are relative to owners. Keep in mind, 5% S&C corps or all partners also and sole proprietors are subject to these owner compensation limits. And that is, if you're using the 8-week, which there's really no reason to do that, but if you're using the 8-week, you're capped at $15,385. And if you're using the 24-week, you're capped at 20,833 or 20.8333% of whatever you claimed in 2019. Non-owners are capped at this 46,154, which is basically just 24 weeks of the max salary that you can pay them. And remember, non-owner employees do not have any caps relative to their previous year salary, whereas owners are capped at what they earned in 2019. Use that for your basis of your calculation. So the other things that are sort of in the works but haven't happened yet, and so I won't spend too much time on it because it's not law, but they're they're on the table if these things ever get to the floor, which is the covered period, which we currently define as 8 or 24 weeks. You would be able to define as yourself. You would just list when you chose to start your loan and when you finished it, so long as it's within the max period of that 24 weeks, which you sort of can do already, depending on when you submit your application for forgiveness. Again, that self-certification under 150 that the banks really want. We'll see if that happens. You know, there's a proposal to allow everyone to get a second PPP loan under certain conditions, particularly if you've had a 50% or more reduction in sales, those sorts of things. Again, there's $131 billion just left in the fund, not including anything else they might appropriate for it. And then they would allow some additional things that you could cover it with, some minor non-payroll uses of it. And if you want to see what lobbying does, notice that accounting software is eligible, but accountants are not. So you can see how lobbying works in these cases. I've got about, I think, 3 or 4 minutes before I want to turn it over to Georgette to talk about sort of the paperwork involved. But I'll sort of just cover briefly for anyone who hasn't sort of gone to this point already, which is sort of how you calculate the forgiveness process if you can't use the new 3508S form and you have to sort of make the full calculations. And the way you do that is by calculating 2 totals. The first is called the modified total, and there's sort of 3 tests you have to use for that. And then the second is called the payroll cap, which you calculate by dividing whatever you spent on payroll by 60%. Once you have those 2 numbers, you just compare them, and the lowest of the numbers by statute you have to accept. So you start with that total loan amount, you subtract any funds that you don't use on covered items, and then you subtract the other 2 tests from it to see what your modified total looks like. So to give you an example, if you start with $100,000 and you spend it on these costs I've listed below, but notice there's 15,000 unaccounted for. It doesn't really matter what they did with it, but they can't document that it was spent on a covered item, and so they just sort of lose that 15,000 right off the top, and so their forgiveness is already down 15,000. Then we have to look at how we compensate employees, and we have to use the first quarter of the year as the comparison period. So, for example, if we had an employee that we paid in quarter 1 $20 an hour, then the way the rules work, we're allowed to pay them as little as 75% of that and not lose forgiveness, which in this example would be 15. But if we pay them any less than that 15 or that 75% of their current wage, right, then we lose dollar for dollar for every hour they work after that. If it's a salaried employee, then we have to annualize their salary. So whatever they made during that first quarter, we annualize that out to what a yearly would look like. And we do the same thing for what's in the covered period. And we annualize that out to see what it would look like over a year. And then again, we're allowed to reduce them 25%, but we can't reduce them more than that. And you would calculate the same way. So in this example, let's say we took that same employee and we dropped them down to $12 an hour, right? Then that difference at $3 an hour, every hour they work, we take that $3 deduction for that. And so if they work 20 hours over an 8-week period, because remember, the original covered period was 8 weeks, that would be a $480 deduction you would take from your compensation. This is sort of a chart of what that might look like if you had a bunch of employees doing that. And the couple things to note is that, remember anyone like here, like 6 and 2, we reduced them, but we kept them under the 25% safe harbor, so we don't lose any forgiveness for them. But employee 7, notice that they're at 0. We reduced them by 100, but we actually don't take any losses for them because the wage rate is only relative to hours worked. And so if we paid them nothing because they didn't work, we don't take a reduction for that. We deal with it on what's the next test called the FTE test. And so the FTE test, this is a running total of where you'd be at this point. So the FTE test, which stands for full-time equivalent employees, and you get that by 2 different methods, which I'll show you in a minute. But you take the FTEs that you calculate during the time when you have the loan, and we divide it by one of the 2 look-back periods or base periods that we talk about. And when we multiply those out, hopefully it's 1 or more. But if it's less than that, then the difference between that and 1 is the percentage of deduction that we take. So if you have the 2 ways you can calculate these FTEs is by either looking at the part-time employees average hours per week, and just dividing those by 40 to get a percentage. And notice employee F at more than 40 hours a week gets rounded down to 1, because you cannot use that extra 5 hours. They just cap as one full timer. You add all those up and you get a number, in this case 7. But for simplicity, a couple months ago, if you didn't notice, they gave us the idea that you can, for speed, you can just call anybody under 40 hours a week a half. So if you notice on this chart, we've taken those same employees and we've just called everyone whose percentage is under 1, we just call them 0.5. And that could be beneficial to you or that could hurt you. If you're using a decent payroll service, ADP or something like that, they will do all these calculations for you and they will give you a comparison of it at the bottom. You don't have to run the numbers yourself. And so if we do it that way, we come up with 6.5, half an employee less, which again might help you and it might hurt you. So we have to actually look at it. So for example, if we take this company here and we calculated all their FTEs for what's called the first base period, which is February 15th through June 30th of last year. And we add up all their average hours and all the employees, and we do the same calculation. By example, we come up with the number 8. And if we do that same calculation for the second option of the base period, which is the first 2 months of this year, we come up with the number 10. And don't get hung up on why one is 8 and one is 10. It doesn't matter. It just means that this company hired a new person in the beginning of the year, or they paid some more hours. It doesn't matter. Just when you do the math, you come up with the number 10 instead of the number 8. And then we just sort of compare those two to what we actually brought back during the loan period. And we want to get as close as possible. And we see that in this case, base period 1, we were far closer to our covered period than we are in base period 2. So here we're only going to lose 12% of that forgiveness. So that's what we're going to do. And then we're going to, since we only brought back 88% of our workforce, we'll take a 12% deduction, which will cost us 10 grand. So that's the first calculation. It's called the modified total. And in this example, it comes out to a little more than 73,000. But then we have to do our payroll cap, which means we have to take those funds used on payroll, divide them by 60%. And then when we do this for this example, which that company in the first slide I showed you had 55,000, we come with the number 91,666, which means now we compare those 3 numbers. And again, we have to take the lowest one by statute, which turns out to be the modified total in this case. So this company in this example would get 73,607 forgiven, and they'd have a 1% loan at 26,393. Now you also have to subtract from that any idle advance they got. So, you know, if they have a lot of employees and they got a $10,000 idle advance, then their forgiveness is going to be reduced by 10,000. They're going to have a 63,607,000 idle advance. Forgiveness amount, and then they'll pay back 36,000 basically. If none of those work for you, you've got a couple safe harbors. And basically what it means is that if you had to reduce your staff or your wages, as long as you bring them back on a full pay period to their previous rates by the end of the covered period or when you make your application, then you're okay. And the next one is if you had to lose staff because they wouldn't come back or because you couldn't open or you didn't need as much staff because of COVID restrictions that were imposed on you by the city or the state or the county or the CDC, then you don't have to take the reduction for that. You just have to document that. And there's no bright line on how you document it. So we've suggested hit them with as much paperwork as possible. So they don't really want to read through it. And then just keep in mind, if you do have an employee that won't come back, then you have 30 days to report that to the EDD because that could affect their unemployment insurance. So I've included a chart. Again, you'll get a link to this, but I've included a chart which will show you sort of every sort of possible workforce issue that could come up under this, which document the rule is housed at, where you put it on the application and what kind of documentation you need on that. A couple of the other things, just sort of last, we already went over this one, is that we already went over this. Okay. Home use, I don't really cover because we don't need it anymore. We used to need it for the 8-week period. If you worked at home and you needed to figure out how much of your rent or mortgage or utilities you would cover. And you do that by using the percentage you claim on your taxes. But again, now that you can go 24 weeks, there's just sort of no point. You can keep all the funds for yourself if you're, if you work out of your home, because of the caps. The next thing is, remember this, it's called paid and incurred. And that means any cost that's covered of the payroll and non-payroll tax, if you paid it during your covered period, it counts. You can use it for forgiveness, even if it happened 10 years ago, it counts. And then anything that happened during your covered period, but you didn't have to pay it during your covered period, counts as well, as long as you paid it by the next date. So let's say your payroll period ends, but you don't actually cut the check until the month later. But you still incurred the expense during the covered period. Well, you get to count that so long as you would make the payment on the next covered day. And that counts for both payroll and non-payroll rents and utilities and things like that. All right, so that's it for me. So I'll turn it over to Georgette at this point.
Thanks, Trevor. You want to keep sharing your screen? It'll be faster.
Sure, you got it. Just tell me
Okay.
when to change.
Oh, okay. So here's where we cover what documents will be needed to submit with your loan application, and also which documents to retain. To get the complete instructions in the 3508S, I've included the link, one for the instructions and one for the actual form. The instructions are very, very detailed and actually provide definitions for each of the lines that you have to complete, and also which boxes and which boxes to check. And then all the documentation that you will need to submit is on there, and then which to retain for 6 years after the date of the loan forgiveness. The thing I tell everyone is it's really good that the covered period was extended from 8 to 24 weeks. But remember, 24 weeks is almost 6 months. So as you have your payroll dates and you're paying your rent and you're paying your utilities, just file those paperwork in a paper file if that's your preference, or in a file on your computer, so that you're not scrambling when it's time for loan forgiveness to gather that documentation. So that is the link for the application and the instructions. Next page, Trevor. So I simplified this for this meeting specifically, and just to cover the new 3508S form. So for payroll, you're going to need any documentation that you have that can verify your eligible cash and non-cash benefit payments for your covered period. And that's going to include all your bank statements. And remember, if you have your operational bank account and your payroll bank account, you're going to provide both of those bank statements that show the actual compensation amount that you paid to the employee. The other thing they are asking for with the 3508S is your tax forms. And typically that's your 941. If you're using a payroll service provider, those are created and filed for you. What it has on every single employee's name, social security number, how much you paid, and how much taxes you have retained and submitted for them. And you need to make sure those reports cover the entire covered period. So you may need more than a couple of those 941. So for example, if you got your loan in April of this year, your covered period is coming up, but it ends in October. So you'll have to wait for the 941 that includes October, which will be Q4. So you won't even have this 941 form yet to submit with your application yet. You won't have that till January. And then any payment receipts, canceled checks, or account statements that show the employer contribution portion that you have paid for your employees' health insurance and their retirement plans, you're going to need that document as well if you are claiming that you used the money for those things. Next slide, Trev. For your non-payroll expenses, remember Trevor just covered paid and incurred. So you need to verify the existence of that obligation. If you are counting an expense that you paid during your covered period, but was incurred before the covered period, you're going to need that documentation as well. So make sure you grab that document from February 15, 2020, which is what we were calling the base period. And then all the payments you also made in the covered period, just in case those things overlap. For your business mortgage interest payments, you're going to need your lender amortization schedule. So that's something that I encourage people to start looking for now, because who knows when you got that or where it is. So go ahead and start looking for that. You also going to need your lender account statement. That Should be fairly easy. You should be able to log into your mortgage account and then save it as a PDF, stick it on your desktop every time you make a payment. So you have it there, any payment receipts or canceled checks you may have. And then payment receipts, of course, can be electronic if you're paying with Zelle or Venmo or any other electronic service like PayPal. For your rent, remember you might need to find that rent or lease agreement that could be 2 or 3 years old. You may need to ask your landlord for an account statement. You'll need to submit that. And also you'll have your canceled checks and receipts from your rent payments. Right now, the non-payroll that are eligible is electricity, gas, water, telephone, and internet. So just those 4 business expenses right now. We know there are others coming, but right now it's just those 4. So you're going to need the invoices, receipts, canceled checks, account statements, and receipts eligible. And then again, if you are sole proprietor and using a percent of your office, of your home for your office, include just the percentage of that calculation. So not the entire electric bill, but the percent that you actually use for your home office. Next slide. And for sole proprietors with no employees and independent contractors, we get this question a lot, but the entire PPP loan amount is eligible to be considered as owner compensation. So you can extend your covered period more than 8 weeks. It's going to be about 11 weeks. And you can say that 100% of your loan was used for payroll. Remember your caps. The cap is $20,833 or 2.5 times the monthly equivalent of your 2019 compensation. That's the 2019 compensation from your income tax return, whichever is lower. And then you are going to provide the bank statements that show the date of the disbursement. And remember, the bank statement that you submit has to have some identification that you are the owner of this bank account. So if you got the PPP loan in your business, it needs to have your business name and your EIN. If you got it with your social security number, then it needs to have that information. So the bank statement needs to tie to where the PPP loan was dispersed. And again, some lenders may not be ready to take these applications with their portals yet. So we suggest you go and get this form and fill out the form and read it through, and then you'll have everything in front of you when your lender does open the portal and is ready to start accepting the applications for forgiveness. How do we do? That's it.
Good, good. And
Awesome.
so you guys, this loan, the PPP loan, so many people weren't able to access it, but it seemed easy to get, right? The documentation, all that, but trying to get your money back or get the forgiveness piece is much more complicated. And so we're finding if you're not using a payroll company for your activities, please get some help because it can be very complicated. I'm going to put into the chat actually the upcoming presentation where we cover it more in detail, and we do that every Thursday at the same time, and we'll keep doing it until the changes for these programs stop. So we
do, Colette, we do have a question from Robin. She said, why
Okay.
aren't the lenders accepting the applications? They are probably preparing their portal so that you can apply for the loan electronic or the forgiveness electronically, the same way you apply for the loan. They're also, like Trevor said, probably hoping that this $50,000 turns into $150,000 or more, so they don't even have to go through this forgiveness application, and that the smaller loans will automatically, be forgiven.
Yeah.
So, quick question. So, obviously, this does need some assistance because our average entrepreneur or our small business owner, this is way too complicated for them. In fact, someone sent it to me and I'm like, no, I'm not the one. I am not going to even jump into this. So I know PCR, you guys are helping individuals, but are there CPAs in a position to help their tax preparers who has been trained or have the knowledge to do this to make sure that they're following all of the rules and regulations and criteria here?
So I will say that I have reviewed 3 or 4 of our PCR clients' applications for forgiveness. Everybody except for one client that I've looked at actually had ADP or Paychex reports.
Okay.
And those are really simple. Actually, you go into the report and you put in your disbursement date and then the end of your covered period. And then that way the system kicks out the reports and it does all the look back periods and comparisons. And it looks a lot like what Trevor showed you all with his worksheets, except for it has every single employee's name, social security number and all that other stuff. I am not a CPA, but I have an accounting degree and an MBA. And so I have been helping our clients. I'm sure Trevor has too, and other PCR advisors as well.
Okay.
What I will say is the obvious, if you have access to a CPA, if you have a regular CPA for your business, they really should be the ones that are doing this for you. Not everybody can afford, a CPA to go over all their books and everything for them. And there's a remarkable number of CPAs calling me to figure out how to do this. They understand the accounting part. They just don't understand the rules of how this particular program works. And so you sort of need to know both sides. But again, if you have any kind of payroll service that you use and you log on to it, you should be able to find a CARES Act report, a CARES Act PPP report that'll give you some options that you can download all this stuff. And if you don't, you have to call your payroll people and tell them, I want that report. And virtually all of them should have figured it out by now. They're in the beginning, not everybody had one, but they pretty much all. If you can't get anywhere else, that's when you call us. That's what we're here for. So.
Yeah, I actually had a client this week who told me her CPA wasn't sure how to record the loan and how to record the forgiveness, but I do know how to do that. And it's from the AICPA. I mean, I do have access to that information and the board and all that stuff. So I help that client with the actual recording of the transactions.
Okay, then that'll be fantastic. We will refer them over to you guys. So I see Robin had asked a question. So what is the timing for completing the forgiveness? Is it 2020 or 21 early next year? And Trevor indicated 10 months from the end of the covered period.
But no reason to wait that long. If you're ready to get your forgiveness, let's just get the documents in and get this over with.
Okay. And pretty much everyone is kind of run through. I know a lot of my clients or the individuals I've consulted, the money's gone at this point. So a lot of them should be ready to go at this point, right?
Yeah. Once you used your funds for the eligible expenses, you can get yourself ready to apply for forgiveness.
Okay. Byron Reed has a question. How is PCR managing the PPE fraud occurring, and is PCR covered from any financial liability?
We do teach our clients at the beginning of the class. So our legal advisor helped us develop the presentation. So you guys haven't seen the full presentation here, and it's at the link where I dropped it in, but we do share that you could go to jail for fraud. And so we're very clear about how we talk about use of funds and the whole thing. And so, and we put some disclaimers in terms of our presentation as well, because we are keeping track as best we can with all of the new information. Georgette and Trevor, they're constantly looking, anything that we find, we're updating our clients as soon as possible. but we are advising our clients that if you are fraudulent, if you're out buying, your Ferrari and whatever else you're doing, that you have a high likelihood of going to jail. So we don't recommend that to anyone who has any of these government loans. They can find you. So anything else you guys found that good?
Robin has a question. When is the class held at PCR for the full presentation?
It's dropped into that link. If you look there, optimize your PPP debt reduction. So that's what we're helping people do. If you click on that, that takes you to the link for today's presentation. And then we do that every Thursday at 2:00.
Okay, that's fantastic. Anyone else have any question? This is your time. I see from the chat, there were a lot of self-employed, independent individuals thrilled that they could count all the money that they received. So does anyone have any questions? This is the time to ask, guys.
We'll say something for you sole proprietors, because there's not supposed to be sort of any documentation that you need to do to prove that you paid yourself, just by the way, accounting works and the way the law works. However, a lot of the lenders that are accepting forgiveness are asking you to upload documents, and you can't move forward unless you upload something. So, as a best practice, we've always told people to make regular transfers from your business account to your personal account, so you'd have something to screenshot and document. If you're in that position and you have nothing, then you just need to write on a piece of paper, sole proprietor, all funds were used for income, and then just upload that.
That's a good idea.
And with your bank statement as well, that shows the disbursement of the funds.
That's excellent. That's good. That's good practice. That's what they're supposed to be doing anyway. Yeah, to keep the distinguished between the two. Any other questions? Anyone? So let me ask this question. Oh, Robin, you had a question?
Yeah, I just wanted to ask them, just in what they've seen so far, give us some snapshots of where you see the holes. Where do you generally see folks, and is it generally just documentation ends up being the problem?
Good question, Robin.
I'll start with this, I guess, Georgette. I'd say the first problem I see is that people are terrified to use the money, and it's sat in an account for way too long, and then they're getting close to the end of their covered period, and now we're having to use it quickly. And then if you're in that position, you sort of need to talk to us, because there's a very specific way you need to roll the funds out to make sure you comply. I'd say the second most common pitfall is just not understanding how that FTE calculation works. Again, if you're over 50,000 and it matters to you, like I've had people go, like they'll run that report and it'll show them that they're under the number they need to be at, and they go, okay, well, I'll just run it for another payroll, and they don't get that doesn't change the percentage, right? You actually have to change the way the hours work to actually change the percentages. And that doesn't show on the report. The report doesn't tell you how to make it up. It just shows you where you are. So I'd say those are probably the two most common things I've seen.
Yeah.
Byron, I'm sorry. Go ahead, Georgette.
The FTE, the full-time equivalent employees, that has been the biggest one for me, as Trevor said. And then the other one is the documentation, and how folks are recording, how they're recording their transactions, either in their accounting system or not at all. And how the, like Trevor said, scared to use the funds. So these funds are sitting in a savings account, and then they're still trying to operate their business on a shoestring somewhere else. So that's not going to be all that helpful unless they can, provide the account statements from both accounts.
And then, Robin, I just wanted to add, fear is one of the other things we're hearing. Yes, it is a little bit complicated, but people can get help. So the last thing we want is for people not to do anything and then have to pay the whole loan when they didn't need to. So we definitely want people to try to figure it out and figure out how they can erase this debt. We want to minimize the debt loads that our businesses have. And so you know, yes, it looks a little complicated, but it honestly, at the end of the day, it's really basic math. You just have to follow it. You may have to go through the presentation a couple of times to get it. Work with your advisor, but don't be afraid to dig in to get the forgiveness. So we want people to get the forgiveness.
Colette, so let's say after they've done their calculations and there's a percentage that they will have to pay on the loans, when will they have to start making those first payments? Is it next year?
10 months.
It's
10 months, 10 months.
Yep.
Okay, so that's
it was 6, they moved it to 10. So.
And it's a 1%.
1%.
Really, really good loan.
Yeah.
Cheap money. That's
Yeah.
excellent.
cheap
And
money.
I will say this, there's some confusion about the amortization of the loan. If you got the loan prior to June 5th, it's a 2-year loan. If you got it after June 5th, it's a 5-year loan, okay? Now, people will it gets confusing because you have the option to turn that 2-year into a 5-year, but the bank has to agree with you, and they won't, okay? So even though it could potentially, you could turn that 2 into a 5, it's not gonna happen, so.
Byron, did you have a question?
Yeah, it was already responded to or addressed rather. I did have a question with regards to what Trevor just stated. Can you give me an indication as to what and why you would think that the banks would not approve a 5-year? Has that been the trend that you've seen, and why do you think that is?
Well, I haven't seen any of them do it yet, and the reason is because having been inside 2 lenders and working on these, they don't want to do the paperwork. You know, they'd have to do loan modifications and submit them to the SBA and get them back, and they're already overburdened as it is.
Right.
And they've had to hire, you know, anyone with a pulse to come in and work on these things. And the second reason is they just don't want the loan. No bank wants your $1,000 loan for 5 years at 1%, right? Nobody wants these loans, and it hasn't gotten anywhere yet. But you know, the banks are also trying to get rid of the idle advance that they are going to have to finance. You know, that's going to come off all these, because nobody wants a 1% loan for, you know, $2,000 or $3,000 for 5 years or for even 2 years. So that's the real reason. They just don't want them, you know, and they just don't want to deal with them.
It makes sense. Makes sense. I kind of assume that. I assume that, but I wanted to hear it said out loud.
It probably costs the bank more to do the administration for that loan than they're getting in interest.
Because a $500,000 loan is the same effort and trepidation as a $1,000 loan from our vantage point. So
pretty much, yeah, that's exactly right. Yeah. Particularly on these.
So from the bank standpoint, they truly want all of it forgiven.
Yeah, they just don't want to deal with it.
So is that possible? I mean, I know anything is possible today because things change every 5 seconds. That they will get their wish at some point.
Well, you know, like I said, there is a proposal that's been sitting there waiting, you know, to go to the floor, which would do this 150,000 sort of blanket for. I don't want to say blanket forgiveness because it's not, but self-certified forgiveness. You know, the banks have been asking to forgive a lot more stuff, particularly without having to do any paperwork. Well, like we know who has 150,000 or less. We should just send you an email that says it's done, right? We shouldn't have to deal with it. And they also don't want to deal with this deduction for the idle loan, but that has not made it to any bill that I've seen. So while the 150 and under is actually a real bill that's sitting there waiting to go on the floor, all these other things have not made it to a bill.
Is there you mentioned there was still money left in the till, right?
131 billion.
So are they, so right at the present moment, no one can apply for PPP, right? Or are they all shut down?
Yeah, but both sides agree that it should come back. It's everything else that they're not agreeing on in this giant package. But there really isn't any disagreement between both sides on bringing the program back. There's some tweaks to like how it will end up working, whether it'll look exactly the same or it'll be a slightly increased, you know, or slightly different. But the general of it is that both sides agree it'll come back. The problem is the banks don't want it to come back. They're tired of dealing with it already, and they don't want to deal with it again. But you know, if Congress allows it, some bank will do it. You know, particularly the fintechs. So.
Yeah.
And then, Krista, I did want to mention, yes, the EIDL is still open until the end of December. We have a comparison that we are sharing, and I think I might have shared with this group before in terms of the difference between the EIDL and the traditional SBA, and that it really is a good, you know, value for clients because of the low interest rate, no fees. There are a lot of and long-term potential for that. So if you have not done the EIDL and you want to look at that, then, you know, feel free to speak with us as well about that, because we do think that that's a good opportunity. And there is still money available for that, up to $150 now. I think it's the max that people are able to get.
I actually have been consulting with clients, and they didn't think that they could come back. They already have run through they got the PPP, they didn't get the EIDL. So I will refer them over because they're still trying to do business. And it doesn't look like we're not, definitely to the end of this year, we're going to be still in the situation we're in with limited revenue streams coming in. And then that leads into my next question. What's our strategy for starting in 2021? We have businesses that are just hanging on by a thread. So what's the strategy for us to help them move into not the black, they're gonna be in the red for a minute. What is our strategy for the future, basically? And do we have one?
Well, I hate to say it this way, but your strategy is to vote.
I got that.
Like you know, this is beyond the capacity of most businesses to survive on their own. Okay, this requires government intervention, and if we don't get it, there's going to be a large percentage of businesses that just aren't going to make it. You know, you just can't survive if you're, you know, a mom and pop shop and you don't have a giant source of capital behind you when you're not allowed to operate for 8 months or a year. Like, it's just not going to happen. So, you know, the first strategy is vote and get on your representatives, and let's get stuff passed that actually keeps everyone in business.
Okay, I completely agree and concur with that. And that's, you know, that's what everybody should be doing right at this present moment. Because I'm really fearful of what 2021 is going to look like. I mean, we are smack dab in a, without us knowing it, a recession, probably worse than we've ever seen, or definitely worse than we will have seen. Anything you guys want to wrap up with, or anyone have a question or a statement that they'd like to make?
I had another question.
Okay.
Can you guys, are there some specific banks that you know right now that really are actively engaged? Because again, if that's the process that they have to go through, then we at least need to know who's out there, you know, with an open door. Okay, that's my answer.
Let me know what you mean by open door. Redefine that, clarify that a bit.
Well, yeah, again, if you're saying that the process is that folks have to go through the banks in order to get the forgiveness, are they going through their bank that they bank with right now? Or are we looking at, does SBA have a list of banks that they do business with? Do you go through the SBA website to identify those banks?
Well, for the forgiveness piece, you have to go back to whoever issued the loan. And there's some question about that if you went through the fintechs, because they're not actually the lender, right? So if you used a Blue Vine or a Lendio or something like that, they're just the front for some bank behind it, like you know, Celtic or Silicon Valley Bank or something like that. And so we actually don't know how that works. We you know, the assumption is they would take the information and forward it to the bank. But you know, it's in the bank's interest to approve your forgiveness. I mean, they want this loan off their books, and they want it to. They don't want the loan. So you know, hopefully they're going to be better at it. I'd say the downside is that most people got their loans through fintechs, and fintechs are just not that great at responding, because they're built for speed and not for service, you know.
Right.
And then the one thing, Robin, I was going to mention are the CDFIs. So like a PCR, but a lot of the CDFIs are, you know, looking for additional capital to be able to fund Black and brown businesses, those that have not had access to the capital. So CDFIs like ours, we are still doing loans as well, but we're kind of like the banks. We follow where the money came in, so the PPP and some of the SBA. So some of those loans are still available, and we are still funding, but the funding is limited. So we're continuing. All of the CDFIs are like, where's the additional money for lending to come in? So.
And to Ardina Artist had a question. If you were denied for your EIDL, can you reapply? We also have a webinar on reconsideration
Wednesdays.
for EIDL on Wednesdays, and that's with Trevor. So you'll get good information. Great.
So that's on Wednesdays. So if you guys can send me some information, you got a flyer or something, and then I'll get that out when I send out this recording to everyone. Because there's so many people that this has been valuable, guys. Thank you so much for coming with this information, because we have questions and we know what happens in our community. We don't know who to ask. And so you're absolutely right, Colette. We sit back, we're fearful. And those that there are probably a lot of them that still have the money in the bank, so fearful that somebody was going to come take it away from them. And they didn't want to have to be responsible for it. So if they were going to have to pay it back, I'm just going to give the whole thing back. And unfortunately, that's kind of how some people think, because the fear is driving them. So thank you guys so much for coming out. And I'm going to make sure everyone gets this information and anything, and your classes as well. So thank you, Colette. You're awesome. Thank you, Georgette. Thank you, Georgette. I've heard a lot about you over it, but I've never met you. I know, because I'm the other pro advisor in the community.
Well, good to meet you in person.
So it's very nice to put the face with the name now. So thank you, guys. Trevor, awesome, dude. Awesome. Thank you so much. We appreciate it. Byron, thank you for stopping by. Come back on in next week. I think we have Bianca next week, don't we?
Yes, we do.
Oh, no.
I'll be back.
You'll be back. Okay, thank you. So I want to thank you.
This was great.
Thank you. You guys come on back. This is what we do. We just make sure that there's information disseminated. If you have new information, just jump on back in. The link is the same every week. And then after that, it's right now on a watch party on Facebook. And then I actually convert it, and it will sit on an archive on our YouTube, on the Business Zone's YouTube page. So you can always go back there to find it. And then I'm going to send it out in an e-blast in the next couple of days. As Trevor says, the most important thing for us to do right now is to vote. And tell your children to vote. Tell them if they don't know how, if they're 18 years old, tell them what they need to put on that ballot. And then I suggest you drive it to Norwalk. Don't put it in a box. Don't trust anything. Drive it to Norwalk and put it inside of the registrar's office. That's what I'm going to do with mine and my family. So that is so important. And it's up to us to make sure that we have to change what's going on. I don't know what another 4 is actually a terrifying nightmare to see what another 4 years would be like if we don't change. So thank you guys. Appreciate it. See you guys next week.
Bye-bye.
Bye, everybody. Thank you.
Bye, everybody.
Oh, and
Thanks.
West LA, what is it? West LA will be open for ballots on October 30th. Thank you.
West Angeles.
West Angeles. And today is the last day to complete the census. Please get it out to everyone that you know. They snatched that back so quickly that it made your eyes, you couldn't even blink fast enough. So make sure everyone gets that in. If we're not doing it for us, let's do it for our children. So see you guys.
Thanks, Krista. Bye-bye.